Hello, everyone. Good morning. Hi, everyone. Welcome to our today's webinar. My name is Christine Kagendo, and I want to welcome you today to KRA, although you're not with us here, but we believe that we are together wherever we are and you are keeping safe. Today's objective of training you on the overview and introduction of KRA is because of the collaboration that we've had with KICD. I believe we've interacted with some of you in the previous training. A few years back, like 2 years ago, we started our collaboration with KICD because we were doing the new curriculum, the CBC, and we found it wise to integrate our tax curriculum, to integrate our tax matters in the new CBC. So we've worked with them on various areas in the early areas of curriculum integration. That was grade 4, grade 5, and I believe some of these materials are with you. I believe actually you have the designs for the upper primary. Is it upper primary for grade 4, 5, and 6? And now we went ahead and did mainstreaming in the junior secondary school. We worked with them. I believe the designs are being worked on and the approval process. And that is why we brought you here today, so that we can take you through an overview of what KRA is, what we do, and the various aspects of taxation, so that these materials, or rather this information that we are sharing with you today, you might find it necessary or useful as you go ahead, as you continue developing your materials for various grades and for various strands. So welcome today. You can feel free to ask us any question. You can raise your hand. We are going to see you and we're going to give you a chance to ask. And we are going to continue engaging with you and interacting with you. And at the end of it, and at the end of this training, we are going to share this presentation with you. And in case of any other queries, you can still contact us and we continue with our collaboration. Thank you very much. Feel free and welcome. I am going to give room to our presenter for the day so that she can take you through the various aspects of taxation. Karibuni sana.
Good morning, everybody. My name is Rhoda, and I'll be taking you through an introduction and overview of Kenya Revenue Authority. And this is just to give you an understanding, even as my colleague has said, we've integrated tax education with the new curriculum. So we just want to make you understand just a brief introduction to taxation and Kenya Revenue Authority, what we do, the types of taxes, our mandate as Kenya Revenue Authority. And we will begin with an introduction of what is taxation and a brief history of taxation. And we'll also look at some of the taxpayers' rights and their obligations. We are also going to look at the benefits of paying taxes and the types of taxes. And we shall also look at compliance and the effects of tax evasion. And just to introduce taxation, we are human beings, and therefore we need order, we need structure in order to help us to run things the way we do. And that's why we do elect a government. That is at the end of every 5 years. And the purpose of the government is to take care of our basic needs. So how do we fund the government? And that is where we bring in taxation, because tax is a levy that is charged on goods and services. And then all this is collected together by the government, and it is used to provide resources for the citizens, such as infrastructure, education, and health. So basically, a tax is a levy, and it is charged on an income or on a good or on a service. So we need for a government to run effectively, they need to have a very good taxation system. And we quote Oliver Holmes, who says that taxes are what we pay for a civilized society. And in Kenya, taxation has played a key role in defining our national development, even when it comes to the Big Four agenda. Any type of development that is there, we need taxation, especially right now when we are going through the time of the coronavirus. And the government needs a lot of money because we have to feed people who are not going to work. We need to invest in our health systems to, for the purposes of treating people who are contracting the virus. That's why we need taxes. So that's one of the importance of paying taxes. So a government must have an effective taxation system for it to run effectively. Otherwise, we'll find ourselves in a case where we are always borrowing, asking for money from funding from other, like for example, what do I say? What I'm saying is, we need money so that we can have our national pride instead of always having to ask for loans and for help from other countries or donors and people who are funding us. So we look at a brief introduction of taxation, and what we need you to understand here is that tax is not new. Taxation has been there since way before. It's not something that it is not only in Kenya, it has been running all through, and we need people to understand that it is not only in Kenya where we pay taxes. So what is the history of taxation? So it was the first record of tax was in Egypt in the 3000 to 2800 BC, where the Pharaoh charged levies. We also have in the Bible, Egyptians were asked to pay 20% of their crop to Pharaoh. And we also have somewhere where Jesus quotes that you should give to Caesar what belongs to Caesar. Basically, Caesar was the ruler. So what that basically means is, let's give to the government what belongs to the government. And we also have for Muslims, they give part of their produce as zakat. They give to the poor to feed the poor and all that. And also, if you remember that during the colonialism period, the slaves were charged poll tax. Every adult was supposed to pay a hard poll tax. That was also a form of taxation. So it's not a new concept. It has been there way before. Since then up till now, we still have the taxation. So that is a brief introduction of taxation. When we come to Kenya Revenue Authority, it is the body that is charged by the government to collect taxes. And KRA was created as an act of parliament in 1995. We have many departments, but we only have 2 revenue departments. We have domestic taxes department, which is in charge of collecting domestic taxes. That would include income tax and VAT and also excise duty. We shall later on discuss those taxes as we go on. And then we also have customs and border control, which is mostly at the ports and at the borders. So they are charged with collecting taxes on imports and exports, and also charged with maintaining security at the border and entry points, so that we don't have cases of contraband goods and illegal goods coming into Kenya. So those are the 2 main revenue departments: domestic taxes and customs and border control. So what is the mandate of KRA? KRA is it runs only under the Act of Parliament. Everything that KRA does has been passed in Parliament, which means it is an act. So KRA cannot just wake up one morning and decide, you know what, today we are going to charge this tax. Today we are going to increase VAT from 14% to 20%, for example. We cannot do that. When a bill when the cabinet for treasury, the cabinet secretary for treasury reads those can I call them suggestions, or give suggestions on particular laws, amendments of the law, they go to parliament, they are discussed by the members of parliament, amended accordingly, then they are taken to the president for assent. If the president assents, it becomes law and we are charged to effect that law. If the president rejects, it goes back to the parliament. So that's why we have so many acts. We have the Income Tax Act, we have Value Added Tax, we have Excise Duty Act, we have so many amendments. So that is how KRA operates. It operates under the law. And the mandate of KRA, we are charged to collect taxes. We also assess taxpayers to determine the amount of tax that should be paid, and we also account. And by accounting, we mean that once we collect, we have to sort of tell the public how much have we collected this year, and that after collecting, that money goes to treasury, and that is where the money is distributed into the various ministries and county governments. So that is how KRA operates. And then we look at the term of the rights of the taxpayers. You as a taxpayer, what rights do you have? One of them is information. You are entitled to get accurate and timely information from Kenya Revenue Authority. Information that you require regarding your taxes, any information that, because KRA is a public body, you have a right to get the information that you need, and you have the right to get it on time and get the accurate information. Then you have the right to impartiality. You have the right to be treated. You have to, you should be treated impartially. That is in terms of when we talk about collecting to collect taxes and duties and levies. That is the only thing that we should collect from you, and we should not treat you like you are not worth. I don't want to use that word, but you should be treated impartially. That is in terms of taxes. Then you have the right to courtesy and consideration. Any officer is supposed to treat you with courtesy, and you should not. There should be no discrimination when you are dealing with Kenya Revenue officials. That is also a right. Then you have the right to presumption of honesty. When it comes to tax assessments, we assume you are honest unless there's something that shows us contrary to that. If you say, for example, let me give an example of, say, for example, the new tax turnover tax. If today you have told us that in the month of January you sold goods worth 100,000, we assume that is honest, that you're being honest. So we presume you are honest unless we go through the records and we find maybe you lied or there is a contradiction. Otherwise, you are presumed to be honest. You have the right to question Kenya Revenue Authority. You have the right to question the officers. If you feel like something is not clear, if you feel something has been done to you, or if a service has been provided to you and you feel it is not right or it is not fair, you have the right to question. And we have mechanisms of how you can question us. Then you have the right to privacy and confidentiality. Any information that you give the authority or any information that we have about you regarding your taxes, your personal information, it is private and confidential. No KRA officer is allowed to share any information about the taxpayer with the public. Then you have the right to identification. If a KRA officer comes to your premises or comes to your wherever you are, where you are conducting your business, or they stop you somewhere and are questioning you, you have the right to tell them to identify themselves. Even when you come to the office, if they don't have the badge, they have the right to introduce themselves to you, and you have the right to know who they are and why they are there. Then you also have the right to representation. You can be represented by, you have the right to be represented by an authority or a licensed agent of your choice. It's not a must that you deal directly with Kenya Revenue Authority as an individual. We have licensed agents. You have a right to be represented by the agent if you so desire. Then we look at the obligations. Those are the rights. You are right as a taxpayer. So what are your obligations if you're a taxpayer? If you have a PIN, if you are dealing with KRA, you are one of our stakeholders, what is your obligation? One of them is to produce records. If you're called upon by the commissioner, maybe there is an assessment going on or maybe an investigation of some sort. If you're called upon by the commissioner in matters to do with taxes, your tax liability, you are obligated to produce records that will be asked of you. That is one of your obligations. Then if, for example, you're operating a business, if in case you make any changes on the business, for example, you've changed the business name or the trading name or the registered address, you are obligated to notify the commissioner, because the records that we have of you, in terms of the business name and the trading name, if you change any of that, you are obligated to notify the commissioner. And also, if you are caught in an offense and you are called upon, you are obligated to appear before the commissioner. You also have an obligation to submit your tax returns in the approved form and on the set date, on the due date. That is one of your obligations. If you're registered with a PIN, of course, you'll have a tax obligation. You must submit your returns in time, otherwise you incur penalties, and you're also obligated to pay any taxes due. We look at the benefits of taxation. These are numerous. We cannot even exhaust them here. Why do we pay taxes, and what do our taxes do for us? One of the main sources of revenue for the government is taxes, the taxes that we pay as taxpayers. So when we pay, when Kenya Revenue Authority collects this money and it goes to treasury, what is that money used to do? That is what we mean what we are saying when we talk about benefits of taxation. And what is this money used to do in terms of education, free education, building schools, all that, even the ones that are being built at a county government level, because this money is the same money that will go to the counties. Every county is allocated a particular amount of money. When you talk about medical services, as I was saying before, especially in these times of coronavirus, we need to buy so many things. We need to invest in the health system, buy beds, pay nurses, all those, buy masks, medicine, all those ventilators, and build more hospitals, increasing the bed capacity. Government cannot do that without money, and that money is what we are referring to as taxes. Improved infrastructure. One of the best examples that we use is the superhighway. Those who knew that road before it was constructed, you can see the massive development in terms of that. Even all the roads, marking of roads. We also have electrification in the rural areas. I think you have also seen that when it comes to youth fund and women fund, giving people money to set up businesses. That is also money that has been obtained from taxes. Security services, with our security forces, also investing in security for our country to prevent us from any form of attacks. That is also taxes. Agricultural subsidies, when we give fertilizer to farmers, and subsidized fees, for the maybe seeds. That is also part of taxes. And the most important is sovereign pride, which is what I said at the beginning of the presentation. And what is sovereign pride? Having the pride as a country that we can depend on ourselves. We don't have to borrow. The constant borrowing that has been going on. If we pay our taxes as we are supposed to, if we declare the correct taxes and everybody pays taxes such that the burden is not on only a small number of people, we are not going to have instances of borrowing. And that is where the sovereign pride comes in, that as Kenya, we can pay for what we need by ourselves without asking for help. So those are just a few among the benefits of taxation. And then we look at the effects of tax evasion, and I'm only going to look at the three. Heavy burden of financing government on fewer shoulders. And this one I'll explain by saying, those who pay taxes in Kenya are a very, very small percentage compared to the number of Kenyans that we have in the country. I said about 3 million Kenyan paying taxes, and we are about 40 million, and 3 million cannot sustain. The money that is paid by 3 million cannot be able to take care of everyone in the country. And it is because we have so many cases of tax evasion. People do not want to pay taxes. And why don't people want to pay taxes? Is it because they don't know? Is it because they feel like if they pay, the money is being misused? So if everybody pays their taxes, we are not going to have a burden on a few people. For example, if I say for people who are employed, you have no option. You have to pay tax because it is deducted by your employer. So you find that the biggest percentage of taxes comes from pay as you earn, because those are people the tax is deducted at source. But for people who are in business, where we expect you to declare and tell us how much did you make, how much, and pay the required percentage. But most people under declare. If you make sales of 100,000 and then you tell us that you made sales of 10,000, that is under declaration, and that means you're evading paying taxes because you're not paying the correct amount. So the burden becomes very heavy on especially people who are employed, pay as you earn. It becomes very, very heavy. Yet we have people in business who are making millions. So that is one of the effects of tax evasion, that the pain is felt by the few, those who are in employment. Then we have reduced pace of development due to limited funding. There is no money to fund development in the country. Roads have to be constructed. We have hospitals to be built. We have schools. We need a lot of money in the country, but there is no money. So the pace goes down when we talk about housing. If the government is to build houses for citizens, where is the money coming from? And if people are not paying taxes, there's no money. So it results to borrowing. And then we have lack of sovereign pride, as I had said. We say choices have consequences, where we feel like we've been bought as a country, because if we get a huge amount of money from a particular country, then we owe that country a lot of money. So we don't have pride. You don't have pride of walking around as a Kenyan saying, I'm a Kenyan and I'm in this country. Yeah, that's what we mean by lack of sovereign pride. So those are just three effects of tax evasion. Now we look at the types of taxes. And when you talk about types of taxes, we have the main type of tax is called income tax. But under income tax, we have so many methods of collecting that income tax. Income tax, as it says, is a direct tax. That means it is a tax that is charged on the income. Income is what you get, what you earn. If you, for example, I'll start with pay as you earn. You work, then at the end of the month, you are paid. You have earned because you have worked. You have worked for your employer, and then they compensate you at the end of the month by giving you a salary. So it's your income. It is your income. So income tax is a direct tax, and it is charged for each year of income. The first method of collecting income tax is pay as you earn, and pay as you earn is the general tax for all employed people. If you are in employment, you are charged, you pay as you earn. But you as the employee, you're not the one who pays the pay as you earn. It is your employer who will deduct that money at the end of the month. Before they give you your pay, they deduct pay as you earn, and then they remit to the authority. So pay as you earn is collected at source from individuals in employment, and it is gainful employment. Gainful employment. So that is one method of collecting income tax. And I've said it is income because it is money that you're making. It is income you're earning. So pay as you earn. Then we have corporate tax. So pay as you earn is for individuals who are in employment. Then we have corporate tax. And corporate tax is for companies. Those who have registered companies, it is called corporation tax. And the rate varies whether it is a resident company or an unresident company. A resident company is a company that has been incorporated in Kenya, and the tax rate is 25%. This was amended as per the tax amendments law that was passed on 25th of April, a few days ago, if you remember, the one that was signed by the president. Initially, corporation tax was charged at 30%, but that has since gone down to 25%. And also for pay as you earn, what I was just discussing previously, the tax bands have been changed as was proposed due to the situation in the country with coronavirus, so that we can give more taxpayers can have more money in their pockets. For example, the relief was increased from 1,408 to 2,400, and that is just to add a few more coins into your pockets, because we are all going through a hard time. So also corporation tax for companies, and companies pay on their income, on the income that they make at the end of the year. And if I can mention something on companies, companies are supposed to pay installment tax, and installment tax is paid in installments, as in quarters, every quarter. And this is just to ease the burden of paying taxes, because if, for example, a company, we give them from January to December, then if you have to pay all the taxes by December, it's going to be a very heavy tax burden. So you're allowed to pay in installments, so that you can pay a little the first quarter, and a little the second quarter. There are 4 quarters. Then any balance that you have should be paid before the end of the 4th month, after the end of the accounting period. So you pay in installments, and then at the end of the year, when you do your accounts, you see, for example, I have tax of 1 million to pay, but I have paid in installments. I've paid, for example, I've paid 100,000 first quarter, 100. So you calculate that, then the balance is what you pay. And non-resident companies are taxable at the rate of 37.5%. That is another method of collecting income tax. That is for companies. Then we have withholding tax. Withholding, as the name suggests, to be left with something. So it is deducted at source for certain incomes. I'll explain withholding tax by giving an example. Say we have someone who is what do I say? A professional. Say you do training. Your work is training. You are contracted by companies. Say, for example, you've been contracted by KRA to come and train their staff on a particular aspect. Say, for example, you are training on customer service. So you are called upon by KRA to come and pay and train their staff on customer experience. So you are a trainer. You are a consultant, in short. When you give that service, you will be paid by Kenya Revenue Authority, and you're going to be paid, for example, by a check or cash. You'll be given, say, for example, the agreement was to be paid 5 million. But then once you're given that 5 million, how do you pay tax on that? How are we? Okay, leave alone Kenya Revenue Authority. Maybe another company has contracted you. How are we as Kenya Revenue Authority going to get to you to know how are we going to know that you have made 5 million? Can we trust that you're going to pay taxes on the 5 million that you have been paid voluntarily, because no one has, it's not in the system, it's not captured in the system that you have been paid, and that is where withholding tax comes in. So this company that you are offering the service to, they're supposed to deduct a certain percentage of that money and pay to Kenya Revenue Authority. That is what we call withholding tax. And for consultants, withholding tax, the rates are different depending on the service being provided. Let me use, for example, the example of a consultant. If you train the staff, then you're paid 5 million. They are supposed to withhold 5% of that amount of the 5 million and pay to Kenya Revenue Authority. When they pay, you're going to be issued with a withholding certificate. What do you do with the withholding certificate? Withholding certificate shows that you are paid 5 million, 5% was withheld and paid to Kenya Revenue Authority. So is that a final tax? No. So Kenya Revenue Authority already knows that you are paid and you worked and you are paid. So by the virtue of that withholding certificate. So from there, when you're filing your return, because 5% is not the final tax. When you're filing your returns, you cannot say that you did not work, because already in the system, we already know that you are paid and a certain money was paid. So you will pay the balance. You will file your return by declaring the withholding certificate and pay the balance. And that the balance depends on whether you have another income or that is your only source of income. So if you have other income, you will pay 25%. It's supposed to be 25%, so 5% was deducted, so you'll pay 20%. So that is how withholding tax operates. It's also a method of collecting income tax. Another method of collecting income tax is advance tax. This one is paid by public service vehicles and matatus, those who are in business, those who have, we have passenger carrying, that is matatus, and we have luggage carrying, for example, the lorries, those who transport goods, they pay advance tax. This one is paid once in a year, and you cannot go for licensing or inspection, motor vehicle inspection, without having paid advance tax. And they are the applicable rates. For passengers, it's paid per passenger. For luggage carrying vehicles, it's paid per ton, and it's paid once a year. Then we have turnover tax. This is the one that was also amended in the previous in the amendment law that was passed recently. It used to be 3%, but now it is 1% of the gross sales of a business. So if you're selling, this is what people like to call mama mboga tax, but it's not mama mboga tax. It's tax for business, people who are in business. If it's charged on the sales, not on the profit. So if you make sales of 10,000, you pay 1% of that, which is 1,000 as tax. It is paid every month before the 20th. Then we have another method is residential rental income. This one is paid by resident persons on rental income. Those who own properties where we have people, residential property, they pay residential rental income at 10% every month. And it is paid on the gross rent received. If you have tenants, the amount that you get at the end of every month, you pay 10% of that every month. That is for landlords. Then those are the methods of collecting income tax. And I said income tax is direct because it is on the income. The other type of tax is VAT. VAT is not an example of income tax. It is an indirect tax on its own. What I was talking about is income tax. And VAT is charged on supply of goods and services that are provided in Kenya or on importation of taxable goods or services into Kenya. So you register for VAT only if you're dealing with vatable goods. And vatable goods are goods that are charged VAT. If you look at the receipt that you get when you go to the supermarket, after calculating the total amount that you pay to the cashier, if you look at that receipt well, at the bottom, they have a section where they have written VAT. So VAT is a percentage of the price. It is already included in the price. If you buy, for example, if you buy a pen at 30 shillings, that 30 shillings is already inclusive of the VAT. So you don't pay it apart. And VAT is collected by designated persons. That is the people who are registered for VAT. For example, supermarkets, they charge VAT on the goods that are charged VAT, and VAT has different rates. For example, it was also amended. It used to be 16% for general rates, but right now it's 14%. We also have 0%, and we have exempt goods that you don't charge VAT at all. And those are goods that are for mass consumption. What most of the people need is exempted so that it can be easily available for people, because if it has VAT, you realize the price will go up. Then we also have 8% for petroleum products. Any person who is registered for VAT must use and install an ETR machine. That is how you collect VAT. You must have an ETR machine, the one that produces that receipt that shows the VAT. So you realize when I talk about VAT being an indirect tax and not a direct tax like income tax, is because it is not paid on your income. It is a tax that is paid on consumption. You consume something, then you pay VAT. If you consume bread, if you eat bread, you have consumed. If you buy something from the supermarkets for your own consumption, and then you pay tax on that, it is a tax on consumption. So it is an indirect tax, and you're not the one who is paying it directly to the authority. It's the shop owner who collects it and then remits to the authority. That's how it's indirect, and that's how it is a consumption tax. It is not on income, it is on consumption. Then if you are registered for VAT, you are required to maintain proper records. You have to keep your records for a period of at least 5 years, and they must be kept in either English or Kiswahili. So that's how VAT works, and it is due on the 20th of every month. So it's also paid, and it is paid, and the returns are filed monthly. Then the other type of tax is excise duty. Excise duty is what do we call it? Excise duty is also used to be called sin tax. Sin, S-I-N, as in Thambi, called a sin tax because, and the reason why it is called a sin tax is because it is a tax on goods that are not considered to be very important or they are luxurious, sort of. It is not a must that you consume them. That is why it is called a sin tax. And excise duty is charged on goods that are manufactured in Kenya. If you manufacture these goods in Kenya, you will be charged excise duty. For example, I'll start by giving examples of excisable goods. One of them is alcohol. So when I name them, you'll probably understand why it was called a sin tax. One of them is alcohol, tobacco, wines, spirits. We also have chocolates, sweets, soda, bottled water. So those are some, just to name a few. They're examples of excisable goods. So if you look at the characteristics of what I've listed of excisable goods, one of them is they are luxurious. You don't need them. You don't exactly need them. We normally say they are used to display economic class rather than as a necessity. You'd not say you need, okay, this is my own view, but if you're told to choose between what you need between milk and a bottle of beer, most people will go for milk. So you will not find excise duty on milk, you'll find it on beer because it is a luxurious good. It is not a must you consume it. That is one of the characteristics of excisable goods, that they are luxurious. It's a display of economic class. And also they have a low price elasticity. That means if an increase is made on the goods, it does not necessarily results to a decrease in consumption. What do I mean? If today we announce that alcohol, the price has gone high, you will still find people consuming. And like other goods where if you add price, the consumption will shift, because we always shift to goods that are affordable. So excise duty is charged on those goods, and those that are manufactured in Kenya, for example, by EABL, they manufacture alcohol, they pay excise duty. Those who manufacture sodas, Coca-Cola, those who do bottled water, the bottled water, for example, Dasani, they pay excise duty. So that is excise duty. Then we have custom duties. Custom duties, these are collected by Customs and Border Control on importation and exportation of goods into Kenya. An example is import duty. If you're importing goods from outside the country, you pay import duty, and it's a percentage of the custom value. How much you bought the good, you pay a percentage of that as import duty. Then we also have export duties. Also, if you are exporting goods outside the country. Then we have another example of custom duty is import declaration fee. Also, goods that are imported into the country for home use, they pay IDF. It's called IDF, import declaration fee. And we have RDL, it's a levy on goods imported into the country for home use. So those are the types of custom duties. Then lastly, we talk about compliance. Tax compliance. What is tax compliance? How do we assess compliance? So for Kenya Revenue Authority, we use a self-assessment. That means we don't come to and check your goods and check your records and tell you this is what you should pay. We do self-assessment. You assess yourself. You say this is what I bought. That's why I was talking about the effects of tax evasion, and I said some people under declare. You assess yourself, how much did you make, and then you pay the percentage that you're supposed to pay. That is what we mean by self-assessment. You calculate your taxes based on your obligations and your income, and then you pay what you're supposed to pay. And you're supposed to be honest. You're supposed to be very honest and willing to pay, and you have to be compliant. That is what we mean by a compliance. But we also have areas of where we struggle with, where there's issues of under declaration, making false declaration. Some people don't want to pay VAT. When you go downtown, you are told when you want to buy something, you're asked, wanataka na VAT ama bila VAT. Such issues, you see, because if you pay with VAT, you get a receipt and the price is higher, so you go for the one that is without VAT. So those are some of the issues that we have when it comes to compliance. We also have people who collect, but they fail to remit to the authority, but those are issues that are handled by the authority on a case-to-case basis. So that is what we mean when we talk about tax compliance. And that is the end of our presentation. We will go to the questions. There's there's a question here. Are we on or not yet? There's someone who's asking, for 5% withholding tax, how do you know how much to give KRA, given people like others do not keep books of accounts to know the profits they have made? Because it does not make sense to assume that the whole of that amount is profit. Let me respond to that question. Of course, not all of it is profit. And you have expenses that you have incurred as an individual. So when you're filing your return for withholding tax, we look at it from when it comes to filing, it is considered like a business. So we give you, in the return form, you have a section where you fill in your expenses. If, for example, you're saying as an author, what expenses did you have? For example, if you have to travel from one place to another place to meet your clients, you can claim fuel, you can claim transport, you can claim if you're buying lunch to your clients, only if, this is where we say, for the purposes of the business. If you met a client, for example, in a hotel, and you bought them lunch, that is also something you are allowed to claim. So you look at your expenses there. You need to because I said for withholding, your return is annual. You file at the end of the year, so you need to keep a record. It's important to keep a record of your expenses, so that when you're coming to filing the return, you can claim your expenses and your expenditure. So that tax will only be calculated on the profit. If you claim expenses of, if for example you make 1 million, 5% was withheld, you minus your expenditure, so you will only pay tax on the profit. And how withholding works, the 5% that was withheld, you are going to use it to offset the tax that you should pay. For example, if 5% was withheld, and you can send your questions, or you can raise your hand so that we will see you and we will take down the question. So what I was saying about withholding, what was withheld will be used as a credit to offset what you should have paid. For example, you have made 10,000, 5% was withheld. When you're filing your return, at the end of the return, those who are familiar with the Excel form, when you declare the tax that was withheld, it balances from the tax that was you are meant to be paid. So it doesn't go to waste. It's a credit it's like someone who has pay as you earn. When you're filing, you're not filing to pay unless you have a balance. The tax has already been paid. So for withholding, it's the same. You will deduct the credits, and then you will pay tax on the balance after you have subtracted your expenses. I hope I've responded correctly to the question. Please keep your questions. You can raise your hand and you self-mute so that we can, when you're given, you be given a chance to ask questions. If anyone has a question, or if you need clarification on anything that I have said. Claudius, please self-unmute. Claudius, you ask the question. Sharif Ali, please self-unmute and ask the question. Okay, I have a question. There's a question here from Frederick. This is an area of interest to authors. My thinking is you need to organize a seminar to educate others on this. That is very well noted, Frederick. We shall organize on that for others. We shall organize for a seminar. If we can organize for one to have a webinar, or maybe a live session if the issue of corona is resolved. But we are going to work on that. I wish we can get through to all the others and have their contacts so that we can be able to organize the seminar and invite them for the training. But that is very well noted. We shall organize for a training. Thank you for the feedback. Questions? Sharif?
Can you hear me?
Yes, I can hear you. Yes, I can hear you.
Yeah, I wanted to ask, is it only the withholding tax which you can deduct from taxes, or are there any other taxes?
Sorry, please repeat. Is it only?
Is it only the withholding tax which you can use to deduct for the India, or are there also other taxes which you don't know?
For the end of year?
Tax.
No, it's only with.
Yes.
When you talk about deducting, because withholding is the only tax that where you get a credit where you can deduct from your tax due. It's only withholding, unless the tax was withheld and paid to Kenya Revenue Authority. Otherwise, all the other taxes is it's withholding and corporate tax, because corporate tax, as I have mentioned, they pay in installments. So at the end of the year, they are allowed to deduct what they have already paid.
So,
Thank you.
Okay, you're welcome. Claudius? Musyoki Muli?
Yes. I just wanted to know, in case of a payment of income tax, and I do not make a claim for some years, let's say I don't make a claim for 5-6 years, would I still have an opportunity of balancing out my taxation by requesting KRA to knock off what I overpaid those years and I didn't make a claim? Or is there a time limit within the time that I should make the claim?
No, for income tax, there's no time limit. Income tax, there's no time limit. Where we have a time limit is only on value added tax. So you can make the claim even after a few years.
Straight to KRA, sorry. Straight
Yes, you
to
make
the main office, or I have to go to my branch?
I don't know whether, are you making the claim as a refund or do you want to use it to offset your tax, the tax that you should pay?
As a refund.
Or as a refund. Refunds are the application is made online on iTax. You initiate the process online on iTax. If you log in, there's a tab for refunds. Then once you apply, it generates a task. Now, essentially, you should get feedback on your email, but for follow-up, you come to Times Tower. Refunds are processed at Times Tower, 18th floor. But you can also send documents. You can scan the documents and send them via email, especially during this period. Florence Waeni.
Yes, further to Musyoki Muli's question, what if I want to use the payment to offset? Is it automatic or do I need to do something?
Unfortunately for income tax, yes, of course, yeah, you can use it to offset. Sorry, what I meant is unless if you have a penalty, you can't use it to offset with what you've already paid. But it's not automatic, because if, for example, you had paid, say, for example, income tax a few years ago, and now you have what do I say? What happens is now we'll get into the system. When you check on the ledger, if you have an overpayment, the system will generate for you the amount for the overpayment, and it's going to give you with a number. It's called a registration number, which you should declare when you're filing the return. So it's not automatic. It's something. You have to make a request. If, for example, you had overpaid 20,000, make a request, and then they're going to generate for you sort of a credit and give you a number to declare when you're filing the return, so that it can offset your tax due.
That would be now applicable the following year, because most times we know the following year. I see. Okay, thank you.
Yeah, the following year. Okay, you're welcome. Peter Onanga. Peter Onanga.
Hello, can you hear me?
Yes, I can hear you.
Yes, I was saying that I believe the purpose of our meeting today was to come up with ways of designing content for junior secondary.
Yes.
And I realize we've learned so much about the taxes. So what kind of what extent will we go to creating content that will not be too heavy for the learners at that level?
So, as my colleague said at the beginning of the session, the matrices have already been developed, and they are It's a very complex one for me because I don't understand those terms of KICD. So for every grade, there is an extent to which you will go based on the matrices that have been developed so far. So ours is to provide you with the content, and then based on the are they called matrices? The scopes and matrices that we have developed, for example, for junior secondary, then you'll be able to pick from what we give you. You'll pick from what we give you, and then you will incorporate it. I don't know whether am I responding to your question, Peter?
Yeah, you are, but I realize when you look at the book 4, the things that we teach that maybe you didn't mention at any particular level, like the wealth tax, capital gains tax. Will that now be incorporated in a simpler way for these young students?
Yes. I'm sorry we didn't mention capital gains tax. That is an error on my part. But it gets deeper as you go per grade. So at the beginning, it's just an introduction to mention that we have this tax. Then later on, as you go to other grades, it goes on getting deeper. Now they'll talk about how it's calculated or as they progress.
Okay. Okay,
Yeah,
good enough. Thank you.
You're welcome. If there is no any other question, I hope I've responded to all the questions, and I hope that you have found this to be very helpful to you. We will be sharing this content with you, and as I said, this is just one of the many engagements that we are going to have, because tax education has been incorporated in the curriculum as an aspect when we talk about financial literacy. And what we are hoping to achieve is to have students and have a generation that is going to appreciate what is tax and the importance of paying taxes. And we are hoping to change the perception and attitude that people have towards taxes as we progress, such that when a learner is growing, they know tax is part of my obligation as a citizen in Kenya. And I believe this is going to be accomplished through your help. And thank you very much for creating time and joining us. We shall share the content, as I said, and we shall engage further so that we realize when we train you, you're also going to train others. So this is knowledge that you're going to share with others. So we are also increasing tax awareness in the country. Thank you very much for your time. And we have come to the end of the webinar. Have a nice afternoon.